All right, let me just do a quick sound check here in both rooms. Excellent. All right, guys, we're going to get started here in about 2 minutes. All right, let's get going here. Sound check. And I think we are cooking with gas. Awesome. Okay, excellent. I knew, yeah. So Mark Douglas's books, Trading the Zone, Disciplined Trader, are exactly about psychology and money management and trading. There's some other ones out there, but I do think those are the two of the best ones. No, awesome, Rad. No, it's good. It's always good to get new folks in there. Not only is it just for asking questions, but also, it's just, I would say it's kind of, you get a good group together. It actually helps the group improve their own trading results as well. Because you can post stuff like, hey, I'm long Netflix. What do you guys think? Or just, you kind of have your plan, but then it's also, if you get into a pickle, you got a kind of a support group as well. Should we be lying down on a couch? Well, part of this probably. All right, I think we're ready to go here. Yeah, so what's going to happen here is, now, just so you guys know, you don't have to frantically write this stuff down. You will get a copy of this presentation. And this is just kind of a touches on the highlights of what I call trader brain. And if you can kind of, typically when people go through this, there's certainly some aha moments. Remember, a lot of the stuff I've learned is just through my own personal experiences, which include a lot of pain and suffering when I was starting out. And there's always times when you wake up and it's like, oh my God, how do I work my way out of this kind of stuff? And there's all that, there's always, the market's very, very good at throwing curveballs. And, it's just kind of getting comfortable with the idea that that's the environment that you're in, and how do you make the best of it? And psychology, once you've got the setups in place, from there it's always psychology. Anytime I see, it's like, if you're having a hard time, it's typically because you've abandoned a plan of following your setups and are chasing the market or fighting the market or something like that, versus just, all right, this is my plan and I want to execute my plan. And the reasons people don't do that are varied, but I'm gonna touch on a couple of those things here as well. All right, so I think this is interesting. So I did this exact class on August 28th, 2018. And I did this poll. And the poll was basically, where's the NASDAQ going to be in 2 months? Okay. 48% said up, 5% said down, and then 47% said sideways. And we have a polling feature in our software. And so this is something like 300 responses. And of course, if we go and look at the markets on August 28th, let's go look. So August 28th is right here. So right here, when the poll was basically where we're going to be in 2 months, 47% said higher, like 40% said sideways, and only 5% said lower. And yet what happened is, not only are we lower, but we're lower by a large margin. So I think it's always fascinating like that. I'm always fascinated by the psychological makeup of the market. If everybody's long, there's no one else left to buy. And how do you tell if everybody's long? Well, there's things like the put-call ratio, which we'll take a look at. And there's just informal polls like that too. So always just kind of keep that in mind. When everybody is right here, nobody saw this decline coming. And the main thing I want to tell you is that it doesn't matter. You don't have to know that this is going to happen. You just have to have rules. Part of my rules are, if you get below the 21 EMA, get out of your longs and go short. Now, what happens is sometimes you get whipsawed, but then when something like this happens, you can play with it. All right, and those are just things, over time, you just kind of look at. And so again, you always want to have rules in place that not only take into account movement of the market, but also protect you from yourself. All right, so from there, so I thought that was interesting. I want to just kind of keep that in there. But it was interesting. No one at that time thought that the market was going to go lower, yet we indeed went lower. And so part of that is this part of your trading plan has to take into account that the unexpected can happen, okay? You don't have to know what's going to happen next. You just have to be prepared that anything can happen next and make sure that you're trading accordingly. All right, so from here, I think it's very important to block distractions so you can help yourself out. For my kids, I got a thing called Disney Circle. And there's other things you can do here too, but basically, you know, it physically blocks them from getting onto sites that they shouldn't be on, okay? But if you also have a site that you're wasting a lot of time on, like Facebook, block it, okay? There's an app called Freedom app. Just block it, okay? Those time sucks can kind of, you know, eat away at your, you know, your mental health. And when you're trading, you know, you do want to be relaxed and focused, and, you know, looking through Facebook can make you agitated because there's a lot of stupid stuff posted on there. There's another book that I like called Willpower Doesn't Work, meaning that if, you know, willpower can fail time and time again. So if you set up your day in such a way where you don't need willpower, like, okay, you block yourself from distractions, you've got an office that's clutter-free, you know, you have you know, maybe a trading partner that helps place orders and manage them for you so you don't, you know, fall into any bad habits. And then anytime when I'm driving into the office, I always like to listen to Esther Hicks videos on YouTube. And they're very good, just kind of the idea of like, look, just be open to receiving, don't be resistant, things like that too. And the whole idea of this is just to get you into the right psychological mood so that you're open to the idea of things like profits. You're open to the idea of following a plan and stuff like that too, and just not starting the day full, you know, you just got to get into a good place basically to make this work. Actually, I think that is a great idea. Let's do a poll on market sentiment right now. Here, I'll post this in both of the rooms. Okay, so right now, okay, currently, all right, where did the S&Ps close? Let's see, we'll do the NASDAQ. So NASDAQ at 66.65, okay? By March 1st, the NQ will be higher, lower, sideways. All right, there's that. And I will do this in the other room too. Currently NQ at 66.65. By March 1st, the NQ will be higher, lower, and sideways. Oh, cancel. All right, so let's get a couple hundred responses. And then, yeah, it's interesting. And it's always good to kind of see what it was. We'll see what the makeup of both rooms is too. We're doing this in 2 rooms right now. So I'll get some screenshots of this. And I will actually copy and paste these into the presentation. Okay, survey for Jan 16th, 2019, 2 rooms. All right, so I think we're good here on one of them. So let me get a screenshot of this. Okay, there's that one. And on the other side, curious to see if the two rooms, because we're doing this in two rooms, so I'll be curious to see how different they are. All right, so we got, so high, so again, two separate rooms. So higher is 41% with the room with about 700 people in it, 39% over here. Down 32%, 35%, and then sideways 24%, 29%. So pretty close. Again, two different rooms that are listening in here. So basically, it's a little mixed. Like before, it was very much nobody thought it was going to go lower. Okay, and at this point, it's kind of 50-50. Right? It's kind of like, well, I think it's going to go higher. I think it's going to go lower. So when you get something like that, you get a much more anything can happen. If you do get something, though, just keep in mind, if it's like nobody thinks it's going to go lower, it's probably going to go lower. All right, so we'll keep that in there. And then we can check back in a couple of months and see what happened. Well, everybody has different views of the polls. Like, well, this is what but the poll's the poll, right? It's just all the poll is people talking their book, and it kind of gives you a sense of what people think and stuff like that too. Again, just a data point, useful stuff. Well, so here's the thing: when I actually just look at the way the markets are now. So at some point, it's like, well, we're too stretched to the downside. Let's look for a snapback. But I actually try not to have a preconceived notion of where I think the market's going to be in like 45 days. Now, for the purposes of something like this, I like to participate. So I did say in these that the market would be lower. I would expect that the market would be lower. But what I try to do is the only way I would take a short setup, like I'm not going to short a rally just for the sake of shorting a rally, I would have to get a specific setup. But I also think, too, the biggest thing here is that, remember, what drove the markets lower was Powell's comment in October that we were a long way from neutral. And then when he finally came out, whatever it was, a couple of weeks ago, pretty much when the market bottomed and said, okay, we're fine, sorry, my bad, I overclocked. And now what we're going to do is we're going to go a little bit more dovish. Then all of a sudden the market's been rallying ever since. Yeah, Powell flip-flopped. The Willpower book, is that about trading? No, just in general. Just in general. All right, so psychology and trader. In real life, you get mad at someone, so you stop talking to them and life goes on, okay? Or you feel insecure and fearful, so you make a joke and cover it up. Life goes on. In trading, you get mad that the market is going against you, so you double up. Okay, or in trading, you feel insecure and fearful, so you miss a great entry and end up chasing it. And at the end of the day, those strategies can work sometimes, but it will always, always, always lead to a P&L that causes frustration. Okay, so the sum of this is basically the strategies that you use in life to cope do not work in trading, and if you try to apply them to your trading, it will not work in the long run. Okay, and that's the first thing to realize. We're all the same when it comes to emotions. We're human, and this idea, if you're unaware of it, if you are unaware, this automatically takes over. Okay, you buy, you get excited. At the moment of euphoria, you're multiplying. You could do this trade 10 more times, and you could retire from your job, and then it starts to fall. And at denial, you're thinking like, well, as soon as it comes back to break even, I'll get out because, that $1,000 that I was up, that's mine. And then all of a sudden, now you're at a loss for the trade that turns into panic. All right, maybe the markets aren't for me. That's capitulation. And then it just kind of goes on and on. And so if you're unaware of these ebbs and flows, the market just, your brain just automatically goes into that routine. And what I like to look at the markets, this is kind of like to look at is that, you know, when we had that big bottom in December, that's kind of where we were, right? Everybody was short, everybody was despondent. That's the point of maximum financial opportunity, okay? And euphoria, you know, August 28th, when only 5% of the market people thought the market was going to go down, that's the point of maximum financial risk, all right? And so it just kind of, you know, you got to take that into account as you're setting up your trading plan. So psychology and the trader. So we grow up learning not to make mistakes, okay, which drives our trading decisions. And when I say we grow up learning not to make mistakes, that's kind of the cultural norm, right? Do good in school, make good grades, don't, you know, don't cause a scene, and that goes into the workplace and all, you know, make all that kind of stuff. And so there's a focus on not making mistakes. And that's the wrong approach to trading. Okay, if we don't want to make a mistake, we become fearful of losing money because that means we're making, you know, oh my God, does that mean we're making a mistake? It's not. As a professional trader, you routinely, mercilessly have losers, and you just cut them off at the knees. That's the whole idea of cut your losers short and let your winners run. Also, just acknowledging in this situation that if we become fearful to lose money, we don't take good setups, but we wait until the pain of not being in the move compels us to jump in. Again, that's emotions. That's not a trading plan. So if you don't, you know, that's the thing is if you're not aware of this, you are a slave to your emotions and the market is just basically having its way with you, all right? It doesn't seem like that sometimes because it's like, oh, well, I made money this time. Yeah, remember, you're going to, no matter what you're doing, somebody who's placing a trade tomorrow, they're going to have the same odds of success on that trade that I am, okay? Even though I've been doing this for a long time. One trade doesn't make a difference. It's over the course of 100 trades, okay? Over the course of 100 trades, do you have the skill set to generate a consistent income? Anybody can make money on the next trade. Unfortunately, if you make money on the next trade with bad habits, you get a false sense of confidence that you know what you are doing, which is no bueno. So what we want to talk about here is getting in the right mindset. Okay. So I love this sign. I saw this at a hedge fund in Shanghai. I used to travel around and kind of consult with the CME and got to visit some really cool places. And this was a poster that they had in their trading office. And it said, take the risk. If you win, you'll be happy. If you lose, you'll be wise, which is a good attitude. Basically in trading, I would rather you spend, you know, 45 minutes researching and setting up 2 trades a week, okay? 45 minutes to find and set up 2 trades a week, and that's it, versus just shotgunning 20 trades a day. Be cautious and careful in setting up a trade, but when your level is finally hit, be bold in your execution of the trade. What that means is, you know, there's this Abraham Lincoln say, hey, if you got 6 hours to cut down a tree, what are you going to do? Well, I'm going to spend the first 5 hours sharpening my axe. That's the equivalent of here. For every trade that you do, you should have at least 45 minutes of preparation, okay? Every trade that you do, you should have at least 45 minutes of preparation, meaning you've gone through the charts, you've found the levels, you know, all right, man, if Amazon comes to this level, I'm selling a put credit spread, all right? That is not a, you know, or part of that is you've got a series of setups and you can scan for them, okay? That's why our scanner is so popular. You just push a button and say, great, I've got my candidates, but you're only going to stick to those. You're not going to, you know, run around and start doing crazy stuff just because a particular stock is moving, all right? Yeah, WP, and what happens is when you start shotgunning, the brutal thing about trading is that the P&L doesn't lie, okay? And if you've got bad habits, your P&L, you know, you can have bad habits and have a couple of good trades, but ultimately what's going to happen is you're just going to give those back. So yeah, you're going to have losses. That's normal, but there's a difference between, you know, basically, you know, you're looking at the goal is to have an equity curve that kind of looks like that. Yeah, you're going to have some losses, but the losses are small, et cetera, et cetera, et cetera. But if you've got something like this, okay, that's when you're just kind of, that's when you're a slave to the markets. You know, you got to be in on the action, right? So again, just think of that rule of thumb. If for every trade that you do, you put in 45 minutes of preparation, what's going to happen, it's going to limit the amount of trades that you're going to do. It's going to force you to focus more on quality versus quantity. And this is so true because I remember talking to a guy and he's like, well, I don't get nervous when I'm in a trade, but I take huge losses. I'm like, dear God, ruin often overtakes those who have nerve. The stronger the nerve, the more probability of staying too long. Again, when someone says that, oh, I've got a lot of nerve, it doesn't bother me if I'm having a big loss, that's a problem. Okay, again, they're basing their trade on emotions. Like, well, I don't feel bad. Why should I get out? My God, what's your plan, man? You know, if you're trading a $100,000 account and you're down 30 grand, that's a problem. Okay, so part of that goes back to like, all right, I'm not going to lose more than 2% on a trade. It doesn't matter if you don't feel bad about it. It's having a plan and sticking to it. The problem with large losses, okay, is that if you, I mean, just think of it this way. If you take a 50% loss, you have to make 100% to get back to even. It's a no-win situation. This is why you keep your losses small. If you lose 5% of your equity, great. You can recover, you know, that's what 7% to get back to even. That's manageable. But big losses are just very, very difficult. All right, so act promptly at the first sign of danger. Now, I say this, and I've almost taken out the slide a couple times, but because it's so obvious, but it's not that obvious for some. Because I mean, it wasn't obvious for me for a while either. So it just says, if small profits are taken, then small losses must be taken. And you're like, huh? What I mean by that is if you're scalping the NASDAQ futures and every time you're up $100, you take the profit, you can't sit there with an $800 loss, okay? Not having the courage to accept a loss and be too eager to take a profit is fatal. So one of my tricks that I still do to this day, and I had to do this, I do this with futures, or I did this with that big Tesla trade that I did, is that when I'm got something going with me, I just hide the P&L. Okay, what I do is I move my screen, like I move my P&L to the bottom of the screen, and I take like a business card or another window and I just tape it over it. Because if you're looking at the P&L at some point, you know, if the numbers are getting really big, that can influence you. So I hide it. You know, I just look at the chart. Like, okay, I don't know how much money I'm up right now. I know it's a lot. Because if you're sitting there and you're up like, you know, say you're up like 5,000 on a trade, and then you watch it fall to where you're only up 3,000, your brain's screaming, you just lost $2,000 instead of just letting the trade unfold, okay? So that whole situation is the ruin of most traders. Exactly, it's like eating like a bird and defecating like an elephant and is unsustainable, okay? Next, when forming a market opinion, leave room for chance. Okay, one of my mentors, Peter Borish, who was the head of research for Paul Tudor Jones, the two things he said to me over and over again is this, and he said these are the only two trading rules that there are. First is discipline before vision, and the second one was first price, then news. Okay. So discipline before vision. You may have a vision that the market is going to go to zero, but have a stop in place in case you're wrong. Discipline before vision. First price, then news. Oh my God, gold's up today. What's the news? What's going on? It doesn't matter. The financial press, here's 10 items related to gold, or to, let's say, Apple, okay? If Apple's down on the day, they're going to look at all 10 items and see which ones seem like they correspond with the down move, okay? So then they're going to report on these 3 that seem like they correspond with the down move. If on that particular day Apple was up, they would look at these same things again and say, oh gosh, well, I guess this and this and this is why it's up. They have no idea, okay? Apple is moving, and then the news is following the price move. That's it. And yes, there's going to be some times when, like Brexit, okay, there's a quick reaction to that. But it settles in very, 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 very quickly. Just remember, the news does not predict what happened. All the news does is react to what happened. And they're financial journalists that don't actually understand the markets, okay? How can you eat like a bird and poop like an elephant? It's not possible. Exactly, that's called destroying an account. And that's what people do. If they take small profits and have big losses, their account goes to zero. So that's exactly right. So respect your limitations, because your limitations will not respect you. I love this. In his secret heart, every man thinks the universe is especially hard on him. I remember one guy, he was trading 2 lots at a time, and he did some trade and had a 10-point stop, and the market came and stopped him out. He's like, I told you they're watching me trade. I'm like, yeah, they just moved the markets they just moved $5 billion worth of money to come get your 2 lot. But it's just really, when you're out of sync, you're literally buying the highs and shorting the lows, and that's kind of how that happens. And you just got to understand kind of on the emotional curve there. Okay. Many have the courage of their opinions, few the courage to abandon your opinions. Trading is really amazing because you can see black and white what is hurting you. And once you understand what's hurting you, cut it out. Okay. Sometimes it's hard to do that to your family. Man, I can't get rid of my family. I see them every holiday. But in trading, you can cut out your habits, okay? And it's the same thing. Abandon what you think might be right if it's not working. Okay, so the thing about this is when you're doing this stuff is that the biggest mistake a lot of people make is that they focus on how much money they can make. And I can tell you the #1 way to increase your consistency in trading is to never again look at a trade and think about how much money you can make. It will always screw you, okay? Not sometimes, it'll always screw you. Instead, just focus on how much you can lose, okay? You set up the trade assuming it's not going to work, focus on how much you can lose, and that's it. The upside will take care of itself. When you focus on this, your brain is not equipped to deal with adversity in that situation, okay? So what is the right outlook here? The right outlook is, and people always ask, well, is trading gambling? And, I'm the first one to say, if you're doing short-term trading, it is gambling, but you're playing probabilities, okay? If you go to Las Vegas and you're playing blackjack, your probability of winning over the long term is 49%. Those are crappy odds. And it's a 1-to-1 risk-reward ratio for the most part, unless you get a blackjack. It's impossible to win over the long haul. If you've got a solid trading setup with a 75% probability of success where you're risking 1 to make 3, okay, it's gambling, but those are pretty damn good odds, all right? And over the course of 100 trades, yeah, you might get, if you've got a 75% success ratio, typically, yeah, that means you're going to win 3 times out of 4. But that doesn't mean every 4 trades you're going to have 3 winners. Over the course of 500 trades, you could have 10 losers in a row, right? So that's where money management comes in. Yeah, no, for sure. Yeah, I mean, courage. So professional gamblers are not astonished at winning and losing, whereas investors are, okay? Gamblers do not panic at a series of losses. A lot of times traders do. Gamblers learn to roll with the punches because they take so many of them, okay? They have also learned to manage their money in such a way that no one session leaves them broke. Now, one thing I notice about, like, myself, if I'm doing some trades and if there's newer traders with me, the biggest thing I see that they're resistance to is getting out of trades that aren't working. They're like, well, how about we just add to it? I'm like, no, it's not working. Let's get out and move on. And you get to the point where I'm totally fine doing that, but I forgot how hard that is to do when you're newer. It's like, well, God, if we could just make this a winner, everything will be all right. And it's such a bad habit. Okay, it's such a bad habit. I remember, and this is Peter Boris too, he yelled at me, I was talking about this, and he said, I said something like, well, I've got a loss here, but I haven't taken it yet because it's not a loss till I take it. And so he slapped me across the face a couple of times, figuratively, and just said, John, what's the difference between okay, so you got a realized loss and an unrealized loss. What's the difference? So what do you guys think the difference is between a realized loss and an unrealized loss? And the answer is not a damn thing, okay? If you look at your account balance, it's going to be the same, whether you take the loss or you don't take the loss. It is not going to change. If your account balance is $20,000, whether you realize the loss or unrealize the loss, your account balance doesn't change. But if you have an unrealized loss that you're denying, it's just the odds of it turning into a bigger loss are pretty high. So always keep that in mind. You know, I always say you got to manage your account by looking at your net liquidating value, not your loss there. Okay, yeah, it's full. If you guys have played Texas Hold'em, it's a great analogy to trading. If you got a shitty hand, fold it. Okay, if you're in a trade that's not working out like you thought, get out. That's the equivalent of folding. Okay, because guess what? There's another hand being dealt. Spend your time finding that next setup. All right, from there. Also, you cannot think of this as money. Okay, if you guys remember the mink coat story in, I think it was Reminiscences of a Stock Operator, and this guy's like, oh, I need 10 grand for a coat, and he went out into the, you know, trying to place trades to make that 10 grand. Oh, that's just toast. I write about a story in Mastering the Trade about Minnesota House. It's the same thing. When you look at that from that point of view, I got to make $10,000. It's just like you're putting gigantic blinders on, you know, because you don't. It's confirmation bias at its worst, because all you see is $10,000. Okay, you're going to try to force the market to give it to you, and that really never works well. Paul, I love that. Yep. It's just like my son pitching. Forget about the last pitch and concentrating on the next one. AU Coin, I did the same thing with the 30K home deposit. Absolutely. That is how I learned that lesson firsthand. Very painful. Okay, so the moment you start thinking of a gainer or loss in terms of purchasing power, you have now lost sight of money as a tool of the game and have sentenced yourself to playing less skillfully and more emotionally. So all the things I'm talking about here are trying to get you to realize tips and tricks where you can play more skillfully, okay, and less emotionally, all right? Because less skillfully and more emotionally doesn't work, but that's naturally, without any training, how we gravitate, okay, toward the markets. Doug, this is a great question. So if you're trying to trade for a living, you need to make a certain amount of money. How do you reconcile that? Okay, so I love that question. So this will come up with money management. So we'll talk a little bit more about this with money management, okay? But let's just say that you need to make $5,000 a month, okay, again, whatever the number is. First of all, do you have enough capital for that? Okay, so if you're trading a $5,000 account and your goal is to make $5,000 a month after month, I wish you the best of luck, okay? But let's say that you've got a $100,000 account and you want to make $5,000 a month. Is that possible? Yes. What's the number one thing that you can't do? You can't have a big loss, okay? So, Doug, we're going to come back to this, okay? We're going to come back to this because that's a great question, and I kind of talk about a money management strategy to do that. Also, the other thing here, and this is another important thing as well. Let me grab a quick little sip of coffee here. How do you shift your thoughts away from the money? All right, that's a good question. And obviously, especially when you're trading and you really need it, it's going to be hard, right? And you kind of have to trick yourself a little bit. Well, but you know what? That's a question also that's going to be addressed here in a second. So if I don't answer it, just kind of we'll come back to it. How do you drink coffee at 4 p.m. and not be up all night? So I did the 23andMe genetic testing, and some people have a high tolerance for caffeine, and I'm one of those. What's ironic is I also have this rare gene where I guess only 10% of the population has this thing where they sleep. It's an extreme deep sleeper. So, which is like when I fall asleep, I'm gone. And so I don't know, maybe the two are interrelated, but it's interesting when you do the genetics test, you just kind of find out things that are in, how you're wired. So yeah, coffee doesn't really keep me awake. It keeps me alert, but it doesn't make me awake. Yeah, Chuck, it's interesting. It's yeah, for some people, the caffeine just doesn't have the same effect. I mean, I'll feel alert, but it won't, if I have a double espresso at 11 o'clock and I go to bed at 11:15, I'll definitely be awake for a little bit. All right, so let's keep going here. And then, so this is an important thing. Don't piss away your capital. Okay, what is this? Now, this is something I just learned over time. As a trader, especially if you're trying to make a living trading, this false need to be in a trade all the time, to be cranking out money all the time, okay? I can promise you this. If you're like, instead of doing, let's call it, 25 trades a week, if you instead just said, you know what, I'm going to follow the 45 minutes of research per trade setup rule and drop it back to 3 times a week, your results will be better for a number of different reasons. You're going to make fewer mistakes because you're not trading as much, okay? The setups that you do take will be higher quality. And, you're going to be putting more thought into it. Now, the biggest thing is when I say don't piss away your capital, when you're sitting there doing 25 trades a week, you are distracted, okay? This is just distracting. And you're going to miss the bigger setups. That's the thing that would kill me. I remember one time just going, oh, yeah, I got like 2 points in the S&Ps, and I did that 3 times. And I think Henry was saying something, well, I caught 50 points in Amazon with my long calls. And, it's just like, oh, man, I fell for the trick again. Versus, sitting there and stalking a trade, waiting for your entry, and then being patient. That, that second scenario ends up making you a lot more money and you make fewer mistakes. There's always that one trade a week or a month that's just a huge trade, okay? And if you're, pissing away your capital, you're distracted and you're going to miss it. So that's the kind of stuff that you want to, be distraction free for so you can be ready for it. Yeah, the one thing too is commissions. Give you a quick heads up. If you're trading a $20,000 futures account, okay, and you're trading 3 lots at a time, 5 times a day, and you're paying $5 a round turn, okay, that's $75 a day in commissions. That's $1,500 a month. That's $18,000 a year. This is a huge, huge hidden expense on a $20,000 account. $18,000 is commissions. So you have to make almost 100% just to pay your broker. Okay, if you make 100% return on $20,000, okay, basically you're going to be at 40K less 18K in commissions. That leaves you with 22K. Okay, keep that in mind. If you just were able to cut those commissions by half, in that case, you'd have $31,000 at the end of the year instead of 22. It's the biggest hidden cost to traders on the planet. And it's funny because someone will say, like we have our trading room, it's $197 a month. It's like, oh man, that seems like it's too much. And I'll look at their statement. I'm like, boy, you're spending $1,500 a month on your commissions. What are you talking about? And so it's kind of funny, since it's a hidden expense, people don't really think about it. Ackman. I would argue that patience is teachable. It's just that, you just basically, like the stuff I said, like, just take 2 trades a week. If you don't do it, it just means you're not, it's like if you go to the gym, right? I mean, if your trainer is like, all right, I want you to do, 3 times a week, do, 100 push-ups, blah, 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 and you do it, you're going to have a specific end result. If you don't do it, you're not. And it's the same thing in trading. It's like, hey, this is exactly how you do it. All right, if you listen to that and follow it, you're essentially forcing patience on yourself. And if you don't, you're basically just choosing to ignore the trainer, right? So a lot of this comes back onto the individual and taking responsibility. It's easy to blame the markets and stuff like that too, but it is 100% up to you. And finally, I mean, look, to be frank, at some point people just say, you know what, I am sick of this shit. I'm going to start following a plan. That's basically what it comes down to. Yeah, once you've made tons of mistakes, then you learn patience. Exactly. How do you combat decision fatigue in trading? Stan, that's a great question. So here's, I don't know if you guys have noticed this, but what happens a lot of times is people make money in the morning. Okay, so let's call this 8:30 Central to noon. I'm just talking day traders in general, okay? And then in the afternoon, they give it all back. So up, money, 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 give it back, give it back, give it back. And the reason for this is decision fatigue. Okay, this is why you don't want to do a lot of trades. This is why if you're doing day trading, stop at 12 noon. That's one of the best things that you can do. But this also happens too, where people make money Tuesday, Wednesday, Thursday, give it all back on Friday. People make money the first 3 weeks of the month, give it all back the last week of the month. People make money the first 9 months of the year, piss it all away at the end of the year. Okay? It's because of decision fatigue. So seriously, trade less is one of the best things you can do. Yeah. Yeah, and Michael, just having a well-defined set of rules and you won't tire. And that's really the biggest thing, is just be willing to miss a lot of moves. No, I would totally agree with that, Mihu. Henry is the most patient. There have been numerous occasions over the last couple of years where I have bailed on positions just like, oh man, it's pushing. I mean, I was following my rules, but it was also like, you know, and Henry and I would talk about it. He's like, well, yeah, I know it's pushing through the 21 EMA, but look at the weekly charts. These things are really strong. He had the patience to hold through that, and he caught the next move up, and then I'm chasing it, right? So yeah, that kind of patience can really serve you well. The good thing about the room too is you see the different styles of trading. Okay, like what am I doing? What's Henry doing? What's Danielle doing? And you know, we post when we're getting in, when we're getting out, and all that stuff too, which it can be helpful for that. If I was going to do 3 trades a week, well, you know, first of all, you know, I'd be looking at hourly charts and above. I definitely would be looking for squeezes. You know, some type of squeeze, and then you know, things like a run into earnings. But you know, squeezes around the 21 EMA with a predefined target, you know, things like that. It's pretty easy. What it means is you just end up missing a lot of stuff, and that's fine. You just got to get okay with missing a lot of other stuff. So A is just saying when I'm losing money, I stay longer, but when I'm making a profit, I get out fast and leave it on the table. How do I avoid this? So A, just so you know, that is the human brain. We're wired to, and this has been proven in numerous psychological tests, but how the human brain is wired is that it will, so let's just say that this is break even, okay, that's 0. So the human brain is wired that if they're down $1,000, okay, they'll take more risk to get back to even, okay, but if they're up $100, they get really, really nervous and don't want to let this go back to 0, if that makes sense. Basically, that's just a way of saying the human brain is wired to let losses continue to run. You just got to understand that. Okay, what that means is predefine your loss that you're willing to take in advance and put in your stop. And then also, if you improve your entry technique, you're going to have less of that as well. Yes, and if you lose $1,000 versus making $1,000, the amount of pain here is about 3 times the amount of joy that you feel here. Okay. Losing is a really interesting psychological factor that everybody has to deal with. Some people can't handle it and they've gone fully mechanical. You know, they just have a computer trade for them and they just watch it. Traders are degenerates to an extent. to an extent, especially if they're unaware. Peter Brandt. Oh yeah, no, he's a very classic chartist. I do like the charts and stuff that he posts. Okay. All right. So let's keep going here. So here's the thing that I want to talk about is a plateau. Okay. So what is a plateau? This is something that I found was a problem that I had. You may not, or it may be something you recognize. When I first got really into trading, what I found is that I had a 50K account. I'm trading like stocks and stock options. Every time it would get to about $75,000, it would magically come back to 50. Okay, it'd get up to 75,000 again, and then quote unquote magically come back to 50, and then I'd be at 75 again, and then I would come back to 50. I don't know exactly what was going on, but my suspicions is that at the time this was my comfort zone. Okay, like having a $50,000 account and running it up to $75,000, that was like achievable in my mind. From there, psychologically, I don't know if I just didn't think I was worth more than that. Maybe I had house money. Maybe my discipline went away. All that stuff factored in where I started trading stupider, okay, more frequently, market order. So on the way up, limit orders, okay, planned trades. On the way down, market orders, more trades. That was what some of the consistent things I saw afterwards. So to get around this, what I started doing is like, okay, the next time it went to $75,000, I just wired out 25K, and now I'm back at 50. And then I made 75, got to 75,000 again, and I wired out my 25K. I started at 50, and then I went to 75,000 again, and I wired out my 25K. Okay, and then I'm sitting here back at 50. And so that was a nice rhythm for me. Now I didn't spend too much time wondering why I just couldn't grow an account. I just recognized that was a pattern that I had. So there's a couple things with this, is that over time I learned how to grow my account doing that. And then B, I learned that there's a huge psychological advantage in paying yourself. Okay, when you start wiring that money to yourself, you start to realize that this is real. Okay, it's not some video game. The money that I'd wire out, I typically would split it up into tangible assets like land and gold, and then entertainment, okay? Experiences, I guess is the right word, experiences. And that's kind of how I would do that. So for me, that changed my trading around, just having a different way and a different way to look at the money. Okay, so how would you do something like that? Now this is all hypothetical. You can, everybody's gonna be a little bit different. So I'm using $10,000, and your goal is to run it up to 25, but it could be 50 to 75 like I did, or you could be trading $500,000 and it's like, okay, every time I get to 600,000. It's different for everyone, but everyone kind of, if you're in this, you kind of get like, oh yeah, I've seen that pattern before. So let's just say it's $10,000, you're trading futures and options, your goal is to get it to 25, okay? Great. So let's say that you get there. You're gonna then take out half your money, you're gonna be left with $12,500, and now you're gonna up that again, okay? So now you're starting off with a slightly larger amount. You're still going to go for 2.5 times, and you get to $31,250. You do it again, okay? At $31,250, you take half the money out, $15,625, and now your goal is to take the remaining $15,625, run it up to 39. Once you hit 39, take out half and repeat. What happens here is twofold. You gradually expand your concept of money and self-worth by starting off with gradually and gradually larger amounts and running up to gradually and gradually larger amounts. And two, most importantly, you're taking money out of the market. The money is not yours until you take it out of the market, okay? If you're wiring, because what's going to happen, there's always going to be that time when you're having a good time, and maybe you get whacked by the market and have a 30% drawdown. Well, if you've been wiring out money every month, okay, that 30% drawdown is going to be that remaining money in your account, not everything. Okay, so taking money out of the market is the best way to protect it from the market, and you get in the habit of paying yourself. Okay, now the time isn't critical. The time isn't critical. All right, sometimes, especially if you're trading leverage, this could happen in a week. Other times it could take a couple of months. The time isn't critical. You're just following your setups, okay? And then when your plateau is hit, you take the money out and you set a new goal. Now, the nice thing with this is that, it's a good point. You got to be profitable first. The nice thing with this is that if you have a plan like this in place, it forces you into good habits because now you have an objective. Your objective is to follow this, and to do this, you've got to have a plan, and you've got to do all the things that we've been talking about. You can't be over trading. You just don't have to do. You just don't have to overtrade with this kind of a situation. And then when you start looking at your statements every day, you're going to realize that overtrading is a bad thing. And the best thing you can do is on some days you don't trade at all. Okay, oh, there's nothing, I didn't trade. Congratulations, that's awesome. So this all goes back to not pissing away your trading capital. Okay, when you're trading leveraged instruments, one good trade can have a big impact on an account under this plan. That is why it is critical to keep losses small. Okay, your job is to take many, many, many small losses. That's a good thing. Also, it's okay to scale into trades. And then the other part of this, you're trading in large. Don't keep shorting the 5-minute chart if the hourly chart and the daily chart are going higher, right? Don't fight the larger term trends. It assumes you're patient for a setup and not trading out of boredom. And it assumes that there are days when you don't trade anything because nothing is setting up for you, okay? Notice that I'm not saying you got to trade more, you got to trade all of the time. Sleep like a baby. Second, it sets you up for a scenario where freak results are possible. People who overtrade without a specific money management plan fall into the category of 90% of the traders who are going to lose. This is basically the plan to take their money. Okay, so now, and you guys are going to get copies of the slides. Though here's one thing. I do think it's important to kind of think in terms of abundance. So this is my computer, and I just have like some cash. I collect currencies. That's a $1,000 bill right there, some gold coins, some notes from London. I just think of this in terms of abundance, and what it does, it kind of makes me a little bit more relaxed. It's like, okay, the money's there, I just got to be patient. Instead of thinking in terms of desperation. And does that make sense? Like, if you're just kind of like, all right, the money's there, I just have to be patient and let it come to me, kind of a thing. What's my address? Well, our office address is listed, but we do have security cameras. All right, so, sorry, I'm chewing on a bar here. Oh, Jack Bogle did? He's a good guy. I don't know him, but I think he did a lot for the industry. All right, so the next part of this, okay, so here's the last part of this. I knew how to trade. That's easy. You can read books and sit in on a ton of webinars. Out of that, you can talk the talk. But my trading account was telling me that I wasn't walking the walk. I had to learn what the mind is supposed to look like when I'm in a trade. I love that quote. All right, so you can know what to do, but it's kind of like, this is your brain on drugs. You need to know what your mind should look like while you're in a trade, and then you work towards getting your mind in the state of mind that'll allow you to do this. Because if you don't, basically, you won't be able to do this. You're going to be a slave to your emotions, and in trading, if you are a slave to your emotions, it's just not going to work, okay? That's not a maybe statement. Oh, if you're a slave to your emotions, you might have enough time. No, it's just not going to work, okay, over the long haul. So let's understand what your mind should look like, okay? So as much as $500 for my desk and everything on it. So as much as traders want to believe that their knowledge is the holy grail, the truth is that their emotions are the difference between success and failure in trading. Okay, I'm going to say this once again because it is the most important thing I'm saying through this entire presentation. As much as traders want to believe that their knowledge is the holy grail, the truth is that their emotions are the difference between success and failure in trading. The mind and emotions are the last frontier that a trader has to master in order to hit their potential. It is also the part of you that will most resist changing, okay? Finding every excuse imaginable not to summon the courage to act. Your trading account will give you unbiased feedback on how effective your emotions, mind, and beliefs are in helping you to achieve success in trading. Okay, this is a brutal statement right here. Your trading account will give you unbiased feedback on how effective your emotions, mind, and beliefs are in helping you to achieve success in trading. Okay, your P&L is your friend because it's not going to hide the truth from you. Your friends might say, oh, you're doing a great job. Your P&L is going to be like, dude, you are screwing this up. Okay, it's going to give you honest, unbiased feedback. Okay, so don't be mad at it. Just understand that it's letting you know how effective your current emotional makeup is at generating money for you. So if it ain't working, take massive action. So one of the things I encourage people to do is, if this is kind of a wake-up call, the best thing you can do tomorrow morning is get out of all your positions, go flat for the rest of the week, and now put together a trading plan based on all this stuff and come back swinging on Monday, okay? Dump all the positions that your old self got you into. Now, you can always get back into them, but give yourself clean slate. Exactly. This is why paper trading doesn't work, because you don't have that emotional tie into it. Everybody does good in a paper trading account because they don't have emotions in it. So the whole key, yeah, Monday is a holiday. You're right. Yeah, go flat and enjoy the 3-day weekend and come back Tuesday ready to swing. Okay, so the whole key to this is mastering your outlook towards uncertainty. Okay, that's the 1000% secret to trading, is mastering your outlook towards uncertainty. Okay, it is just as important as any other element in trading that has to be mastered. I actually think it's the most important. But in your makeup, it's either going to be your weakest link or your strongest link in your trading plan. The key is understanding the relationship between uncertainty and fear for performance as a trader, okay? So the real question here for aspiring traders is whether they are ready to commit to the emotional lifting required to rebuild the mind for trading. Now, I actually don't think this is that hard. 90% of the battle is just to be aware of what's happening. From there, you just gotta, I mean, it can be as simple as this. Go flat and commit to yourself that you're going to start acting like a professional trader on your next trade, and then you're going to start doing that every time. We all know when we're not acting like a professional trader. Okay, what does a professional trader do? They plan out their next trade for at least 45 minutes. They use limit orders. Okay, they never get in with a market order. They've got their 3 or 4 trading ideas for the week, and that's it. Okay, that's professional trading. They know their position sizing. They know that if they know if they get stopped out, it's not going to be a disaster, right? And we all know that if we're, oh my God, the market's going up here, I got FOMO, I got to buy it. That's not professional trading, right? So that's the kind of stuff that we got to look at there. So the goal here is just to be committed to pushing through this barrier to move from talking the talk to walking the walk. The problem here is that it's very easy in trading to be seduced by the brain's easy way out mentality, okay? And if you try to go the easy way out, you're going to remain stuck in the self-limiting beliefs that keep you from achieving your potential as a trader. The easy way out is like, well, let me just do one more trade. I got to make $1,000. Let me just do one more trade. That very statement destroys everything, okay? Because you're going to keep, basically, how you do the next trade is going to teach you how to do the trade after that. And if you've got bad habits and you make money on a trade, that's the worst thing that can happen, because you've just reinforced all those bad habits. So don't be seduced by the easy way out. If you're trying to lower your inflammation, don't go eat a stack of donuts just because they're sitting there right in front of you. So the key here, oh, The Power of Not Knowing. Yeah, no, that sounds like a good book. I haven't read that one, Ron. The key to the mental game of trading is to realize once and for all that uncertainty is the rule. Okay, so when people ask, well, what do you think the market's going to do next week? Uncertainty is the rule. It's going to do whatever the hell it wants is the only right answer. We can have setups that give us an edge as to the probability that may go one way over the other, but the only answer that makes sense is uncertainty is the rule. We don't know what's going to happen next. There could be a Brexit vote. There could be a tweet that Trump sends out. There's all kinds of things that can happen. Nobody knows. But you can have setups, right? Now, the market, the other thing to remember is that the markets could care less if you are there or you're not. If you're there or not. It's like if I'm swimming in the ocean and the wave comes and knocks me over, it doesn't even know I'm there. It's not trying to get me or anything like that. It's just doing its thing. The market's the same way. The market doesn't know you exist, okay? And that's actually comforting. It's not after you. It's not there to help you, and it's not there to hurt you. It's just doing its thing, okay? You just got to get in sync with its thing and roll with it. So here's the key. When you're getting into a trade, and I've seen a lot of people say this in the room, oh, I just get so scared money, and all that kind of stuff. When you get into a trade, you focus on the fear of uncertainty, okay, rather than the risk of uncertainty. If you are fearful, then you start thinking fearfully and you start coming up with fearful solutions, which are no bueno, okay? If you are fearful, you start hesitating, okay? Or you might do impulse trades to get out of your current situation. With uncertainty, an emotional state of fear simply does not work. You need to be able to build and develop impartiality. You need to be able to build and develop a sense of courage, and you need to be able to build and develop a powerful sense of discipline. How do you do this? It's very, very simple. All you got to do is anytime, okay, if you're fearful of a trade, just switch that off and say, wait a minute. Like, I have no idea what's going to happen next. Here's Amazon. I'm scared to get in. It's pulling back. I'm scared to get in. But you don't know what's going to happen next. And it's almost a relief when you sit there and say, oh, wow, I actually have no idea what's going to happen next. So there's nothing to be fearful of. All I got to do is then focus on the risk of uncertainty, okay? When you focus on the risk of uncertainty, it's a lot easier. So how do you learn to do this? Some people were born into families where learning how to deal with uncertainty was encouraged, okay? When I was 12, my parents divorced. Suddenly, there was a lot of uncertainty in my life, so I was forced to deal with that, okay? Now, at the time, it sucked, but it ended up setting me up that trading wasn't, trading is hard, but it was like, oh, from 12 years old on, I've dealt with uncertainty, okay? And that's what trading is. So that was kind of I always joke with my mom, like, yeah, thank you guys for getting divorced because that helped build up my grit. I'm like, don't say that. But many of us end up in families where we are raised to try to not make mistakes, okay, and strive towards being perfect. And that's not good, okay, because then you go out into the world and you just like try to be good and not make mistakes. And so you got to shake all that off. But again, all that means is you can set all of this aside and just say, okay, I don't know what's going to happen next, so I'm just going to focus on the risk of uncertainty, okay, and that just means focusing on risk, okay, focusing on stop losses. So good traders move beyond focusing on loss, beyond focusing on making mistakes. Good traders are instead focusing on probabilities. And good traders are into curiosity. Gosh, I wonder what's going to happen here. And good traders constantly work on being impartial. Of course, I'm long. I'd like the trade to go higher, but the idea to be impartial is like, well, anything can happen, right? And they're able to do this because instead of dwelling on the fear of uncertainty, they just focus on the risk of uncertainty, okay? It doesn't just magically happen. You have to be conscious of this. It has to be worked on every trade, on every day. Because the moment you stop thinking about this, your brain automatically flip-flops back to its default nastiness, okay? That does not help you in trading. That's the only way to create a habit is you just put a big Post-it note on your wall, risk of uncertainty, follow your plan every damn trade, and then just start doing it on every trade, all right? So the benefits of this is that the longer you focus on looking at probability instead of loss, and the longer you focus on developing in curiosity and impartiality instead of focusing on fear, the more you're going to develop what I call trader instincts, okay? This will take your trading to an even higher level because you're no longer accessing your intuition from fear. This is where, Once in a while, something sets up and you're able to pounce on it because your trading intuition kicks in. But the only way that develops is if you've done 100 trades in a row where you do it just like this, where you have your good habits in place. Otherwise, that intuition will not happen. Okay? So whatever your current beliefs are, that is what you're going to find. Okay, this is a brutal statement. Whatever your current beliefs are, that is what you're going to find. All right, so you got to understand, whatever beliefs you have in trading have nothing to do with each other. The only way that trading works is if you focus on the risk of uncertainty and follow everything on that slide. Okay, we have to develop the courage to confront our psychological demons, whether that's doing MDMA therapy or just learning to let all that stuff go, whatever it is, and replace those beliefs with much more powerful beliefs. Yeah, the size of the trade also affects the fear. So people ask, like, how do you do sometimes those 100-lot trades? Okay, well, the first time, it's like going to the gym. The first time, well, push-ups, all right? The first time you do push-ups, maybe you can only do 5. But if you do them every day, a year later, you could knock out 50. Okay, it's the same thing in trading. The first time I lost $1,000, I threw up. The next time it wasn't so bad. You gradually build up your size that way too. Some people can do it a lot faster than others. I got a friend of mine, he'll sit there at any given time. He trades stock, not options, but he's slinging 100,000 shares at a time of big stocks. And it's like, wow. I mean, it's pretty amazing watching that happen. But for him, it's just like, oh yeah, I've never been bothered by big numbers like that. And it's just different for everybody. So the big numbers for him are a lot bigger than the numbers that I'm used to seeing. So once we start focusing on the risk of uncertainty, okay, which stops us from naturally gravitating towards the fear of uncertainty, then it's time to look at the markets and make some decisions. All right. All right. That is the presentation. I will save this for you guys, and you guys can have a copy of it. And hopefully it was helpful. Awesome. Thanks, Weston. Yeah, no, great. Look, I always appreciate the, trading is not, I know how difficult trading is, believe me. And so it's always, I get really bored at cocktail parties, but I love talking to traders. I know the journey firsthand. So anything that we can do to help it make it a little bit smoother, then that's a win for us. Cool, guys. Well, again, I'll get this saved for you. For those of you that were in the open house, hopefully it would be great to see you in the room tomorrow. You guys have the link there to sign up. And I think this is going to be an amazing year for trading. Of all the years I've seen in the markets, this to me is actually the most interesting because there's so many things that could happen this year. I mean, we could see new highs, we could implode. It's not going to be a quiet, choppy year. That's for sure. And so that's always kind of fun. Awesome, fantastic. Oh, sure, yeah. And so the link for the open house, if you just go to simplertrading.com/house, and you'll see there that you can do either the trial or just sign up, and you'll get some extra classes and stuff like that as well. Nice, thanks. I appreciate it, Elsie. No, glad. Good deal. No, good question. No, the trial is 30 days. So yeah, the trial duration is 30 days. Oh, no, that makes sense, Mihu. Yep. All right, guys. James, I love it. That actually sounds great. Yeah, no worries. No worries there. Yeah, no, Monty, and I feel your pain. I mean, it's just, this is all stuff I've learned the hard way. And I always say give yourself the gift of going flat, because what happens when you have a losing trade like that, it takes up all your psychological capital. So you got capital, you got dollar capital, and you got psychological capital. And as soon as you get rid of it, it just frees up your mind, just like, oh, God, move on. Thanks, Darth. You too. Cool, guys. Well, I'll get this saved. And I think that's it. Yeah, I'll stick around. I'm gonna close out with the of the member webinar here. We'll get this presentation uploaded for you. You guys have a good one. And then for you in the open house, I'll stick around a little bit here and answer a few questions. Thanks, Java. All right, guys.